Hello and welcome to Finextra. I'm Thea George and I'm here with Louise Cooke from NEXONTIS Consulting and Robert Cummings from SAP. We're at SAP's FSI Forum in London and we're talking about IFRS 17. Louise, Robert, thank you for joining me.
Thank you.
Thank you very much.
So Louise, what is IFRS 17 and what are the typical implementation timelines?
So IFRS 17, it is a new accounting standard that will be applied to insurance contracts. The IFRS 17 standard, it was finally published on May 18 this year after around about 20 years of deliberation on the topic. And what we're seeing right now in the market is that most companies are beginning to pick up on their kind of projects, on their preparation for the IFRS 17 standard, generally looking to make a software decision during 2017. Implementation timelines then somewhere across to 2019, followed by a relatively long test phase. And most companies we're seeing want to go live at the beginning of 2020 to enable a comparative period before the final effective date, which is 2021.
And what's the perception of market readiness?
So it's a little bit different. Like I just said, most companies are starting already this kind of work, but what we do see is also a lot of regional variation. So continental Europe is actually relatively far with this preparation work. Some of the other markets I think are a little bit behind that, and obviously it also depends on the size of the company. The bigger companies are often more further than the smaller companies.
So Robert, what are some of the options for solutions for IFRS 17?
So there's different ways you can approach this topic. I mean, one way is just to simply focus on it as a pure compliance topic and just fix the outstanding issue to do basically the minimum, and that is an option for some companies, and we're able to provide exactly the tools to do that. Then of course there's the other way that you rethink your whole accounting and make a new order in how you do your subledger accounting. But there's also a middle way where you can actually, in a heterogeneous environment, put in an environment which will allow you to not only solve the IFRS 17 challenge, but also provide more transparency, bring the world of risk together with finance, and provide something which is actually more sustainable, because we believe that once IFRS 17 goes live, it's actually it's not the end of a journey, but it's actually the beginning, because the essence and the spirit of these kind of regulations imply other downstream transparency imperatives that then become necessary. So you want to have an environment that can more easily provide for that and move into that. We saw something in banking some years ago, which was in the banking Basel II area, where actually most of the work actually took place after even the effective date of the go-live, because people had to rethink the way they go into approaches. We think the same thing is going to happen in the insurance industry, that this is the beginning of a new era actually in accounting.
So do you think IFRS 17 is going to end up more in the actuarial or the accounting space?
When you look at the office of the CFO on the one hand, but if you look at the wider finance and risk area, I kind of like to think of it as being an archipelago of islands which are constantly a challenge to reconcile and bring together, and the real challenge is how do you bring more transparency into that and actually bring maybe on one of the islands the key data together into a kind of a hub and spoke model, where you can then bring actuarial data with the finance data, planning data, profitability, all into one area, where you can actually then really do what insurance companies need to do, is get a view of their whole business, their whole risk profile, and we have solutions geared toward companies who want to do that as well.
So what are you specifically doing in the actuarial space?
In the world of actuarial modeling, there are a few tools, one of which is Profit, which is one of the most widely used tools in the market for actuarial modeling. What we're doing is working with them to actually build a bridge from the actuarial systems into the financial systems to bring those worlds together, so that you can actually talk about finance and risk rather than finance and risk somewhere else,
And Louise, how will this help, do you think?
I mean, I think one of the ongoing issues that the industry has had is that we have accounting teams that understand the world of accounting and actuarial teams who understand the world of actuarial. But it's quite often the case that it's very difficult for each of these teams to understand the other team. And I think the way we see this interfacing, the way we see the solutions working together, is really going to enable a higher degree of transparency and insight, so that each of these teams can really understand the results that the other is producing.
Louise, Robert, this was great. Thank you very much indeed.
Thank you.
Thank you very much.
And thank you for watching.